I want you to think about cash flow as breathing. It has to be that natural. When you inhale, that's cash flow coming in. When you exhale, that's cash flow going out.
Welcome to today's episode of the Ecommerce Revolution Podcast, where we dive into the dynamic world of e-commerce and uncover the tools and tactics that empower today's emerging entrepreneurs. Our podcast is part of our community with the same name. The community is geared to providing emerging e-commerce entrepreneurs with courses, content, and coaching to help you all launch and grow successful businesses. Check us out at ecomrevolution.co. Let's get things started. Welcome to another episode of the Ecommerce Revolution Podcast. I'm Ramin, your host. Today, we're diving into a topic that every e-commerce founder and entrepreneur needs to master. That is cash flow. Our guest is a former state trooper turned financial expert who's helped uncover over $150 million in hidden cash for small business owners. He is the creator of Clear Path to Cash system and the founder of Cash Flow Mike. So, without any further ado, please welcome Mike Milan, also known as Cash Flow Mike, to the show today. Mike, it is wonderful to have you here today. Thank you for making the time. We had a great chat before this, talking about all things podcasts, building businesses. I really appreciate you making the time today.
Hey, live from San Antonio is Cash Flow Mike. Ramin, I can't believe I'm here, man. We've been talking forever, and now I'm part of this.
I know. You are gracious with your time and have taught me a lot of things, even just in the 10 minutes that we just talked about building podcasts. You clued me in on a better way to maybe do it. So I appreciate that.
I am amazed at my wealth of wisdom.
Well, here's the great thing is that, see, you're in San Antonio, I'm in Austin, but yet here we are online. I mean, that's the beautiful thing. I guess, I missed you by 10 minutes at the Small Business Development Center conference back in Atlanta last year. But if you come this year and if I'm there, would love to sit down with you and break some bread and chat.
Hey, I'm going to tell you what, I'll be in Orlando. I was just notified yesterday that I'm going to speak twice, right?
Oh, wow.
But believe it or not, this will be the third year in a row that they want me to do the 7-minute conversation. So it's going to be really interesting. They say, hey, new people come, or old people want to hear it again. So I'm like,
right.
Okay, well, let's just do it again.
Well, we're going to dive into the 7-minute conversation because I know that's a big central point of what you do, and I think it's awesome. I mean, as I said at the top, this is one of those topics where, maybe people aren't jumping all the time like, oh, I got to learn, but you've got to learn. It is so important. And I know you make it fun. You make it interesting and entertaining. And, hopefully that's, finance. We have to know our numbers, I think, at the end of the day, right? You got to know them. You can't ignore them.
Yeah, it's really weird that it has to be a discipline. You would think that just managing money would be something that you just do.
Yeah.
We're adults. We got to get through our lives and manage our money. For some reason, when the business switch clicks on, we forget how to do that.
Why do you think? Okay, so what do you think it is? Where's the fear, before we get into the details of cash flow, what is the fear that you've identified after all these years that entrepreneurs just, something happens, they freeze up?
Well, I mean, it's the focus. First of all, people don't realize the amount of work that you have to do, right? We call it working in our business. It's the daily things. It's the thousands of tasks that we do. Keep a customer happy, keep the employee happy, sell, all of these things. And then you forget that, well, it takes money to do all these things, right? You just forget. Right. You just push, trying to be successful. And sometimes you are, right? When you're successful, it still takes more money to be more successful.
Right. Yeah, that's a good point. So at the end of the day, you were building a business that needs to be sustainable, live on forever, and you got to manage your money. So tell me, we deal, a lot of people in our community are early stage e-commerce businesses. Just talk to me about cash flow, the importance of cash flow in those early stages. I know it's important all the way through the journey, but specifically the early part.
Yeah, so I mean, let's just start with what cash flow is. Right. So, and it depends on who you're talking to. You're going to get a different answer. And that's one of the confusing things. We should all agree on at least what the definition is. So if you talk to a business owner, what they're really talking about is, how much do I have in my bank account? Right. That's all they're really caring about. That's all they worry about is how much I got. And I'll tell you something about the banking account or the bank account is it's only going to tell you one thing. Am I having a good or bad day? That's it. Do I have money or not? That's all you're going to know. If you talk to an accountant, they're going to talk about cash inflows and cash outflows. And what they're meaning is when is cash coming in and when is it leaving the business? But then again, if you talk to the banker, that holy trinity of banker, accountant, and business owner, they're going to use words like sources and uses. Did money come from here or did you use money to do this, right? Source and use. So if you start to aggregate that and we talk about lifeblood of the business again, I want you to think about cash flow as breathing. It has to be that natural. When you inhale, that's cash flow coming in. When you exhale, that's cash flow going out. I want cash flow to be so ingrained in your body, it is as easy as breathing.
I love it. What a great definition. That is, wow. I mean, you got very intense there. I love the intensity around this is
Hey, man.
This is what you're supposed to get. You got to get people excited, right? I think that's, at the end of the day, to teach them, get them excited about the topic, right?
Yeah, well, I mean, to me, I'm on a mission to eliminate cash flow as a reason that business fail, right? If you don't have a reason for your business, something that you're passionate about, right? I want you to fail because you had a bad partner or you had bad product market fix or, anything but running out of money. That's the one thing that we should be able to control.
Yeah. No, that's absolutely true. Absolutely true. All right. So let's go back to that critical, how critical is it for me to manage my cash flow in the early stages of my business?
Well, how long do you want to stay in business?
All right. That's the answer. So, all right. So it's absolutely important. All right. So walk me through, just tell me, how do I do it? How do I manage it? Obviously you teach this all the time. What it's like in the simplest form, what do I need to pay attention to when it comes to cash flow?
Well, I mean, the first thing is that you need to have enough to stay alive, right? I mean, let's just start there. And you're like, well, how much is that, Mike? What do I know? Well, if we just take a swag number, the scientific wild guess, right? If you just do that, you need 3 to 6 months worth of operating expense, which means if it takes you $10,000 just to run your business a month, in your bank account, you should be trying to maintain between $30,000 and $60,000. You're like, oh, Mike, that's a big number. I know, but that's what we're working towards. It's bite-sized consumable chunks. Putting away a little bit each month to work yourself up to that. And you're like, oh, why is it 3 to 6 months? Well, think about it. 3 to 6 months gives you time. It gives you time to adjust. It gives you time to react to things. I mean, look what's happening in North Texas, Oklahoma right now, just with tornadoes. I mean, you don't think that's not a huge disruption to business if your business, gets wiped away by a tornado or even huge storms or COVID or hurricanes? It doesn't matter. It doesn't have to be anything huge like COVID. Any little disruption, you need time to be able to react. And that's what the 3 to 6 months gives you, is that time. And in some businesses, there might be a such thing as seasonality, which means, people aren't buying as many swimsuits in December as they do in May, right? So
right.
You might have a dip in sales. This 3 to 6 months lets you get through that period without having a lot of stress. You're like, okay, I can cover my rent. I can cover my cost of goods sold, which is the inventory I need to keep up with my sales, those type of things.
Okay. So I have a follow-up question to that. Before I ask the follow-up question, tell me the difference between profit and cash flow.
Yeah. Profit is what you make on paper. Cash is what you see in the bank, right? So, there's an interesting statistic. Before COVID, there was almost 50,000 bankruptcies a year, business bankruptcies. I mean, it's down to about 19,000 post-COVID because people started paying attention to cash. But of those, 35% of the businesses that were filing bankruptcy showed profit on paper. So think about that for a second. They thought they were making money, but couldn't pay their bills.
Yeah.
So profit is, does my business model work? Meaning I have sales coming in, and after I spend this much, this is what's left over. But cash is what you can spend. You can't spend profit.
Okay. So now that we understand that definition and the distinction between profit and cash, let's go back to that 3 months of holding on to having a runway, basically. Where am I figuring out? I want to figure out that number if I'm a small business. Am I looking at my profit for the month and saying, I got to have that amount back in the business, or am I looking at my revenue and saying I need to have that much? I mean, I want to come to a number and make a decision on my 3-month runway.
Yeah. So what's funny is that you said revenue and you said profit, but I look at operating expense, right? What does it take? Okay. Yeah. What does it take to just stay alive? I got to pay utilities. Okay. I got to pay rent. I might have some employee salaries. I might have, other things, software subscriptions, just to keep the business running. If that's $10,000 a month to do that, then that's the $10,000 that you need 3 times of, right? So $30,000 of that. So you can at least pay your fixed cost. And most people get confused on what's fixed and what's variable, right? Believe it or not, I do this exercise during the course where most people get this wrong. What's the difference between a fixed and a variable cost? And I'll just ask people, and I don't want to put you on the spot, because if you get it wrong,
I don't mind. Right. Put me on the spot. So fixed cost, I mean, my rent would be fixed, right?
Okay. What about utilities?
I feel utilities would be variable because I don't know the amount of electricity that I'm using on a daily basis in my office or in my business.
All right. So that's the classic understanding of fixed and variable, but in the accounting sense, right? In the accounting sense, fixed and variable doesn't mean that the amount varies. Right? It doesn't mean. It means, it means that I only pay it if I make a sale. That's what makes it variable. Okay. Fixed cost is I have to pay it even if I make 0 sales. So your air conditioning bill in July in Austin
is fixed.
You still have to pay it, right? Yes. If you make 0 sales that month, you still have to pay it. So everything that's fixed should be in your operating expense. Stuff I have to pay regardless. Everything that's variable goes into the top, which is cost of goods sold. I only paid it because I made a sale. I paid sales commissions because I made a sale. I paid the cost of goods sold, what it costs for this T-shirt when I make the sale, right? So that's the difference.
So shipping, So if I have shipping, if I'm an e-commerce entrepreneur, shipping would be up there, obviously, in the in terms of your cost of goods sold. You've got the shipping revenue that comes in, but you've got the shipping expense. But that's a variable, right? Because you don't know what shipping is going to be like, because you don't know how many orders are potentially going out the door, correct?
That's right, yeah. And you only pay it when you ship something, and hopefully you're only shipping stuff when you sell it.
Yep, exactly. I hope so.
Otherwise, where's it going?
Yeah, you better find out. Somebody better keep tabs on that. So speaking of inventory, this is a big area. Just the management of inventory in e-commerce is, an incredible challenge. But inventory drains cash, right? You're putting out capital, right? You're putting out money to buy a good. You have to move that through the cycle quickly, get it out the door so you can get that revenue back in and continue. What kind of process is that just on cash flow? And how do I look at inventory? How do I look at it all when it comes to inventory?
Yeah, super interesting, because that's a huge one, right? Especially in e-commerce.
Yeah.
So let me start by saying this. This is my philosophy on inventory. Do you know some families have this thing around Christmas time called Elf on the Shelf? Have you ever heard that?
Oh my! Yes, I've heard. Yeah, we participate. In fact, the folks from Elf on the Shelf were at the founders were at the SBDC conference.
There you go.
And so they got help from the SBDC to build their business. And yes, I laugh, I chuckle, because it's a lot of the Elf on the Shelf. It's a big thing. It's a big thing out there.
Yeah, and the whole thing is that this elf on the shelf is supposed to be mischievous, right? You don't want this guy running around your house creating mischief, right? That's called elf on the shelf. Well, I have nicknamed inventory wealth on the shelf.
Oh,
meaning,
man.
Right? You don't want that there either, right? And people ask me, well, how do I know if it's too old? I said, well, that's really easy. I mean, inventory is too old if you go out there and blow on it. And they go, what?
Yeah.
If you blow on it and dust bunnies come off of the top of it, it's been there too long. Right?
First of all, have you trademarked this? This is a great name, Elf on the Shelf. I love this.
No, I don't know why. I've said it for a long time since Elf on the Shelf. I thought it was funny. So, but here's the thing, right? Is that there is a such thing as the perfect amount of inventory, right? And you use a calculation called PAR, or it's periodic automatic reordering. And the basic calculation is this: the average number sold per month divided by the number of times I can get it per month. So let me give you an example. I used to run bars in St. Louis. Let's just say I sold 200 cases of Budweiser in a month. So there's 200 average sold per month. And if I divide that by the number of times I could get it per month, which is once a week, because they would come in on Monday and I would order, and the order would show up on Wednesdays. So that's 200 divided by 4. That means I need 50 on the shelf. At the beginning of the week, I need 50. Well, what most bar owners would do and what most business owners do is they go in, they look at their shelf and go, give me 5 of these and 10 of those and 40 of those. And they just kind of go with their gut, what they think is going to happen. That's how you end up with too much inventory. Because what I did differently was I would walk in and go, we've got 60 cases of Budweiser. I only need 50, so let's not order any Budweiser. Or I'd say, we got 30 cases of Budweiser. I'll order 20. Only back to 50, because that's the thing. You want to keep up. Inventory is supposed to keep up with the sales value. Other than that, you have too much, so it sits longer. Right? Does that make sense? And I've got
absolutely.
Yeah, in the course, I've got this whole master spreadsheet that helps you break it out by a SKU. So when somebody says, hey, we need to reduce inventory, I know exactly what items have too much, just based on this spreadsheet.
Okay. Oh, I love that. That's a huge, because I think it's still, this, especially in the early stages, it's a big mystery, right? And you gotta be careful, because next thing you know, you're sitting on way too much inventory, and you don't have wealth on the shelf in that situation. That's right. It's the opposite of a wealth, whatever that word is. I'm sure you'll come up with it. Yeah.
You know what's funny? Here's a story, right? A story. I was working with a tire dealer. And if you're ever a consultant like me or whatever, every time you go talk to a client at their location, they all want to take you on a tour, right? Hey, come check out my stuff, right? And we go, think about a tire dealer. You've probably been to one of those things where there's a front lobby, there's the desk where you make the transaction, then there's bays where they do the work, and then behind that is a small warehouse, right?
Yeah.
Where they keep the tires. So I don't know what it is. Every time I'm with a business owner that has inventory, as soon as they open the warehouse door, it's like, whoa, like a big glow comes out of it, and they just love it so much. Look at all this inventory I got. And I'm not seeing the glow. I'm seeing dollar signs just sitting there hanging all around. So I'm not big on tires, right? It's not my thing, right? I don't get jazzed up on tires. And to me, the ones that stood out is that they were huge. I couldn't spread my arms wide enough to get. I mean, these are big tires, and they were taller than I was. I said, "Oh my God!"
Wow.
I said, "How much do those cost?" He goes, "Well, it cost me $3,500, and I charged $7,000 a tire, right? Because these are huge monster tires for big. I don't know. It was up Pacific Northwest, a lot of snow, a lot of things. I mean, a lot, that they have to move. So I'm like going 1, 2, 3, and I start counting them. So there's 16 tires here. 16 times 3,500. He's got $50,000 in tires.
Just sitting on the shelf.
Just sitting on there, right?
In the warehouse, yeah.
$50,000 in tires. And I said, well, how many do you sell a month? He goes, sometimes 2, maybe 3.
Ooh.
And so why do you got 15, 16 of them? He goes, well, in case there's a run on them. I'm the only guy in town that has them in stock. I'm like going, yeah, but you can do that with 4. You can do that with 3, right? Running it down to the right level actually makes more sense. And I said, you'd put $35,000 in your pocket this quarter, right? 2, 2, 2. If you sold 2 a month, there's 6. You run it down, or 2 or 3 a month. It ends up being about $35,000. He goes, how do I put that in my pocket? I said, first, you just don't do anything. You don't have to do anything, and it goes into your. Once you sell the 2, you get the money for the sale, and then don't reorder. Yeah, and then don't reorder until you get down to 4, right? And then you start to reorder only up to 4, and you keep about 4 there, so you don't. You got a safety amount.
Yeah,
and that's how you increase cash flow, by keeping at the right rate. And if you have too much, it's the easiest thing in the world. Through attrition, you get the money coming in and no money going out.
So all he had to do was just look at his look at past sales, look at seasonality, and see, if there is a run, having 4 in stock or 5, having 6 of these in stock would be enough. And that's it. I'm good with that. And then not continue to order. But he's probably continues to just add on. Every time he sells, he goes and gets 2 more, right? He keeps bringing them in.
Yeah. We all do that. I sold 5 and need 5, right? Not necessarily. You need enough to keep up with your sales. That determines your cadence. That determines your momentum, right? It's like, and I'll tell you, every vendor in the world is going to come in with some big offer. They say, hey, we got this special on cotton candy vodka. Buy 1 case, get 3 free.
Right.
Well, really what they're doing is they're pushing their inventory problem to you.
Sure.
Because it's
true.
sitting on their shelf too long, and they go, I don't care. Just get some cash for it. Just get it out of here. Right. And that's basically what they've done is they've shifted their own problem to you. And that's how I ended up with 3 cases of cotton candy vodka that I had to give away.
Wow. That sounds very interesting tasting, cotton candy vodka.
No, it's terrible.
Wow.
Don't even try it.
That's terrible. Don't even try. Got it. Well, that is interesting in the, model. I mean, first, as soon as you sell 5, you feel like you got to get 5 in, but the vendor, making inventory your problem by giving you an incentive, right? And we all can fall for incentives very easily, right? Like, oh, that's such a great deal. Yes. If I do that now, I'm going to be the only person in town or the only person online that has that big hoard of inventory, but it may not matter.
That's right.
At the end of the day.
Or buy 5 cases of swimsuits at 25 or 30% off in December, but you still got to hold them until May. Right? You still got to hold them.
Right.
That means cash is out for 5 months.
Yes. And you don't have enough for marketing now to, run the marketing to sell the product in the first, and that you just acquired a massive inventory.
That's right.
That's great.
Now I don't want people to think that you should never take the discount. I actually built a calculator that tells you when you should take the discount, and it takes into consideration your operating cash. Remember we said how much cash to have on hand?
Yeah.
And it will tell you if you do this, your operating cash will go below the level, and you got to make a choice. But it'll make a recommendation: take the discount or don't take the discount.
Oh, that's great. That's so easy. So easy when you have that technical assistance in making those decisions. I appreciate that. Tell me about early warning signs, with cash flow trouble. Like what would one be looking at, whether it's on a P&L or a cash flow report or simply talking to your accountant? What are you looking for?
The first thing that's going to happen is you're going to feel it. As the business owner, you're going to feel it. You're going to say, oh, my business feels clunky. Like I'm always waiting for money to come in before I can do something else. It's not smooth, right? I mean, you're just always waiting. And mainly that's a timing issue. You got to remember, cash flow is all about the timing of money. There's 2 components to cash flow. One is cash generating activities. The other is cash conversion activities. And let me kind of explain the difference. Cash generating activities starts with sales and whatever you spend and how you price it, all the way to profit. That's how money comes into the company. So I look at that as vertical analysis. Start with sales and just start subtracting things out until we got to profit, right? That's how much money we got. The other part of that is conversion. How long does it take for this to happen, right? Just because I made a sale, if I'm collecting invoices in 30 days, what I sell in January that shows up on the P&L or the profit and loss statement, I actually don't see the cash in the bank account until February. Right. So understanding those 2 components run hand in hand, but they're offset in a lot of cases, meaning, if I'm paying my bills in 30 days, same way, I might recognize the expense in January, but not write the check until February. So it's one of those things that you have to look at the timing. What bankers will look at is called mismatched accounts receivable and accounts payable. That's the difference between money coming in and money going out. For instance, I had a client that was getting paid in 34 days, right? So 34 days, think about it. I give you an invoice, 34 days later, you pay it, right? Seems pretty normal.
Yeah.
He was paying his invoice in 56 days, on average, 56 days. So he would get the invoice, and then almost 2 months later, he would pay for it.
Wow.
Now, think about that. He's getting paid in 34 days, paying in 56 days. That's a red flag. That's called AR/AP mismatch. The banker would say, you're getting paid. How come you're not paying? What's happening in the middle?
Right.
Right. Why are you waiting so long to pay? Now, sometimes sitting on your payables helps with your cash flow. It keeps money in the company longer. But that big mismatch also could indicate that you're doing something with cash in the middle and you're waiting because you don't really have it. It came in, but something happened. Maybe you bought a boat. I mean, people just kind of guess at what they take out of the business. They go, I need money.
Sure.
I'm going to Cancun, and they take a vacation fund and go to Cancun.
Right. Interesting. Okay. Well, I mean, that's all right. So those are the trouble signs that people look for, and and I get it. Sometimes when you try to time it, I've seen this happen too, where they feel like if I just sit on it a little bit longer, sit on my cash a little bit longer, everything will be okay. But I think the mentality is you're probably sitting on it because you don't actually have it. You have put it elsewhere, and you need to keep it in there. So, what do you suggest somebody does in a situation like that? I mean, setting up separate, having multiple bank accounts. If I know that I owe my vendors this, as soon as I get I move money over and kind of build different have different bank accounts to track things.
Yeah, does
that help?
Yeah, a couple different techniques I use. One is called the fast money formula, and that kind of helps you balance how much inventory to have, to how soon you pay, to how soon you get paid. Right, so. And it's the concept called the financial gap, right? And every company has a financial gap, and that's the difference between money coming in and money going out. And you want the gap to be small. Think about that in your mind. I mean, is it easier to jump over a big gap or a small gap? So that's one of the ways that you can do that. The other thing is this notion of how much do you need, right? Everybody kind of can figure out how much they have. And believe it or not, in the finance world, we call that working capital. Right, which is pretty much your current assets minus your current liabilities. That's called your working capital. And if you're new and these are kind of terms that are new to folks, current assets. I want you to think about your checking account. That's a current asset. Current liability. That's your credit card or your line of credit if you've got one of those. Well, that's a current liability. So if it's current assets minus current liabilities, and I've got $100 in my checking account and I owe $50 in my credit card. 100 minus 50 equals 50. My working capital, what I got left to work with, is $50. Well, that tells you about how much you have. It doesn't tell you how much you need, right? And nobody's calculating that up. And that's what I teach people to do is how much does my business need to run smoothly, right? And it's the same calculation I teach. I probably didn't tell you this, but I teach at the Graduate School of Colorado, the Graduate School of Banking. And I'm the small business banking expert, and I teach community bankers how to work with small businesses. And this calculation is the one that a lot of banks use to calculate how much you should have on a line of credit.
Oh, interesting.
So some business owners will go in and say, hey, I'm in trouble. I need a loan. And the banker will say, well, how much you need? And the business owner will go, I don't know. How much you give me? That's the first step in telling the bank you don't know what you're talking about. Right? You don't even know how to run your business. So you're maybe not a good risk. So what I teach folks to do is calculate this up. You're like, this is how much I have. This is how much I need. The difference is what I need on a line of credit, right? To cover the gap, right? To cover that gap.
Yeah.
So, and I know it's hard to talk about on a podcast like that, but realize that none of this is gut. All of it is mathematical. There's a mathematical formula for all of it that you can use to make better decisions and keep cash in your bank account longer.
Love it. All right, well, let's get into what you do and what you teach. Let's talk first of all about the 7-minute conversation. What is it? How does it work? How is it going to benefit me to understand cash flow management and just financial, I guess, literacy? There it is.
There it is. All right, so during COVID, I wrote books. Right? That's kind of I watched TV and I wrote books. Right, so I love it. I originally wrote a book called "Don't Be a Dumb Business Owner." Right,
okay. I like it.
The reason I'm telling you that
very
story,
blunt.
Don't be a dumb business owner. And the title of that came through when I was running through my own cash flow problem. So my own cash flow problem, I'm sitting at the kitchen table and I'm like going, man, I'm not dumb. I just don't understand my business. And you know how kind of lightning bolts go off in your head? You're like, ew, that fits. Dumb, don't understand my business. But I got to write this thing that became the basis of the Clear Path to Cash. It's 8 steps to optimizing cash in a business, right? Or eight different techniques. And chapter 3 was this technique I call the home run financial system. And I call it the home run financial system because it touches all the bases, right? You're like, what does that mean? Well, most business owners don't look at all three financial statements. They'll look at the income statement because that's their report card. They judge their whole business off of that one statement. But like the bank account is only a good or bad day, the income statement is only going to tell you if you have a good or bad month or quarter or year, and then it starts over, right? The reason it starts over is because the profit or the loss at the bottom gets moved onto the balance sheet in the section that's called retained earnings, right? That's really the accumulation of all your profit or losses. Well, the balance sheet is something that most people look at and go, yep, those two numbers match. It's supposed to match. Yeah, that's good.
Right.
That's about it. But it is the culmination of every decision you've ever made, right? It's what you own and where the money came from to buy the stuff that you own, right? Did I take it in a loan? That's the liability side. Did I put it in myself or my investors? That's the equity side, right? So what I have and where the money came from to do what I have, right? So when I started to look at these things collectively, I'm like, well, that's too much to do all this financial analysis on a business. So I put together 6 calculations that showed the biggest problems on all 3.
Okay.
And I take 3 calculations from the income statement. I take 2 from the balance sheet and 1 from the cash flow statement. Right, there's 6 calculations. That's it. If you don't know how to analyze financial statements, start with this course, right? Start with it, and it's free, by the way. If you go to cashflowmike.com, you can get the video course and the spreadsheet that goes with it for free. Just go to the top of the webpage, enter here, and get the course for free.
We'll put a link in the show notes for that for sure.
Yeah. So the reason this book came about, the 7-minute conversation, is that when I wrote chapter 3, I'm like going, nobody's going to read a 100-page chapter. So I summarized it. I summarized it in the dumb book, right? That's why I tell people, hey, you got my dumb book? I summarized it in the dumb book and then wrote the 7-minute conversation. And the reason I called it the 7-minute conversation is because I could do all 6 of these calculations and learn from it in 7 minutes. And believe it or not, it became one of the most popular seminars I did. Is people still ask me to this day. I've probably done it 500 times live, where I just talk about the 7-minute conversation. Like I said, I'm gonna do it for the 3rd time at the SBDC conference. In September this year.
So, all right, now I got to pause for a second and say, how did you get into this? What brought you to this world of finance? What was the light bulb moment you had?
Well, I think you said at the top of the show, you're like going, Mike was a state trooper for 7 years.
Yeah.
Right. So you're like,
yes.
So you're like, oh my God. I tell people all the time, I said, you realize you're trying to learn math from a state trooper. But
why not?
All right. So here's what really happened, right? I'm an MBA out of Baylor, right up the road from you.
Okay. Yeah.
And I'm sitting there writing a student loan check. I'm 7 years in, right, to being a state trooper. And my wife says our 3rd daughter's on the way. So literally, my family outgrew my income. Right? We used to have meetings like going, hey, I had 3 daughters, right? And, a wife and a state trooper salary. It just wasn't, I'm not going to say it's terrible. I'm going to say that I could do better with an MBA. Right. And that's what I felt. I said, why am I struggling when I have other skills? Right. I've always been good at math. And believe it or not, being a state trooper made me better at math. It actually made me a better business owner from a mathematical standpoint. And most people get confused by that. Like, what do you mean?
Why?
Well, they sent me to this. Yeah. They sent me to this school. It's called Accident Reconstruction School. And what you learned in physics that maybe you didn't understand, or what you learned in calculation geometry that maybe you didn't understand, when you see the evidence of an accident on the roadway, the skid marks, the gouges in the concrete, or the gouges, where a car went down into the ditch and then went airborne, all of a sudden, math becomes real life, right? Because you can determine how fast a car went just based on how sticky the surface is. Like ice is slicker than asphalt, right? Or also how long the skid mark is, right? You're going to slide farther on ice than you will on, asphalt. So those type of things made math come to life for me. I'm like, oh my God, I can see it. Now I know what X and Y means, right? Now I, because the formula was still D and coefficient of friction and these type of things, but I could put a real life thing on it. I could touch it. And that's what I brought into the business world was I can succeed at business. I just got to understand how these components move, right? And so I built this cause and effect chart that helped me understand the movement of the actual evidence of the business. Right?
Wow. Man.
Yeah, crazy.
So you were
right?
building but you were building content back then basically for yourself, right? To get better at what you do.
Yeah, this was only for me, right? Up until I sold. All right, so I left and I built 14 companies. This is what's crazy to me. Like for a while, I think I was just a company flipper, like instead of a house flipper, I was just flipping companies. But my first company was a janitorial company that became a hotel staffing company. I just had a better opportunity. There was a seam that opened up, and I started to work in hotels. And it was like a mix between temporary staffing and full-time labor. It was like a hybrid, right? Which means you could get the same person over and over and over again. So, believe it or not, that took off. Marriott loved it. And I opened 27 offices in 9 states in 3 years, right? And had about 500 people working for me. Yeah, it was crazy. It was just crazy growth that you wouldn't expect. But there's such phenomenon as growing broke. And that's where this cash flow came into play, is that, believe it or not, on paper, I had all kinds of money. In my bank account, I had nothing, man. Matter of fact, I had maxed out credit cards. I had to dip into savings from the state trooper. I took a second home equity line on the house just to keep up with payroll. Why?
Wow.
Because Marriott was paying me in about 90 days. Guess what happens every 2 weeks in a staffing company? Payroll.
You're paying out,
right?
Payroll.
So it was being forced to learn how to use a line of credit. And if there's one message I could give people if they're using a line of credit, take the money first. If you sell something, if I use the money to make payroll, as soon as my client pays the invoice, pay the line of credit first and then use whatever is left to run your business. Same thing with inventory. If you use the line of credit to buy inventory, as soon as you sell the inventory, take the customer's money and pay off the line of credit. And if you do that, you're going to keep up with it. Other than that, it's going to be a steamroller, a big wave that just crashes down on you.
That's interesting. So you mentioned Marriott paying you in 90 days. I mean, are they playing the cash flow game correctly? Or are they playing it incorrectly,
that's
waiting
a
that
normal
long
thing,
to pay
right?
you?
That's a normal thing for people.
It's a long time.
Marriott in 90 days, right? So they were playing cash flow games, right? But they're beating up on the vendors, and it's normal for bigger companies to do that. So I mean, one of the things I had to do was go back to Marriott and say, hey, listen, I understand that that's doing business. You're stretching your payables out as far as you can get away with. I said, it's okay. It's going to be okay for a paper towel company, right? I said, I want you to look at my company as payroll, because this has to be done. This is your people's paychecks. And if they were your own employees, you would have to make payment in 2 weeks. 90 days is a little bit long for payroll. So with that, I got them to at least shorten it down to 45 days or so. It's about 45, 50 days. And that timing, just getting paid about 30 days faster, made a world of difference. You're talking about not being able to sleep to being able to sleep. That's exactly what happened to me. If you've ever, worried if you're going to make payroll and you're staying up all night and maybe there's a panic attack associated with it, trust me, shortening the time to get paid alleviates that stress.
Yeah, no, that's a great, so, that's the art of negotiation, negotiate with your vendors. I mean, you're not going to probably have that in the beginning because you're new to a vendor, but over time you should absolutely have some leverage because maybe you're selling more of their product. They need you. They need you to succeed and, getting out there. Tell me, where do you see, e-commerce founders, entrepreneurs, anybody commonly leaving cash on the table? Like what kind of levers can we pull and where can we pull them in a business to get that cash into the business?
Yeah, I mean, especially for e-commerce, I mean, we've talked about the three big levers, right? The amount of inventory you carry. And believe it or not, I worked with an e-commerce provider that was using the Amazon inventory system, right? And they were just kind of, it's not a set and forget type of thing. And that's how my client was doing it, was just setting it and forgetting it. And they were losing all kinds of money just sitting on an Amazon shelf because it just wasn't, it was too much. because they were using their calculations to say how much they should have. And it was way too much. It was like in Amazon's favor because it was there and they could just pull from it and go. But at the same time, I think there's a better way to use it. And I would take my par calculation, compare it to Amazon's calculation, and we were like tens of units off, like tens to hundreds of units off in some cases of how much they should have to keep up with the sales. Now, the cool thing about Amazon is that they didn't have a minimum requirement, so we could actually lower it down. But if you use their system, make sure that they're telling you or you've got it set to your actual sales value, or else you're going to be buying too much inventory to put on Amazon's shelf.
Yeah. Okay. Anywhere else that you see entrepreneurs leave cash on the table?
Yeah, I mean, we do it all the time. I mean, if you just look at I did it this morning, as a matter of fact. I'm still going back and reviewing subscriptions because, subscriptions, things like that. I mean, you've got the way you're paying your vendors. I mean, I probably pay a little fast on like commissions, but that's how people keep selling my stuff, right? They go out and sell my stuff because when my rule is, instead of making you wait 45 days after a sale, I'm like going, when I get the money, you get the money, right? So I may pay more often, and I'm violating my own rule. I should keep that cash in the company longer, but at the same time, it encourages the person to go sell my stuff because they know if they need money, all they got to do is sell something, and 2 days later they got money, or 3 days later, whenever it hits the bank account.
Yeah.
So
that's interesting. Subscriptions, and I'm a big proponent. In fact, I keep a list of every subscription that I have because it's so easy to, 9 here, 10 there, 15 over here, 20 over here. Next thing you know, you're up to like $200-300 and you forget that you even have these tools, right?
Yeah. Here's what happened to me this year, right? In January, I'm like going, what happened to my bank account balance? It got below the amount that I had set for myself, right? And I'm like going, oh man, I had 4 annual subscriptions hit in January, right? The ones that I'd forgot, like from last year, I'd picked up like, oh, I want this and that and that. Well, when you do annuals, it's really hard to remember that. If I see it every month, it's not that big a deal. But sometimes I'll take the annual deal because it saves me, 20 or 17% or something like that. It saves me actual cash. Well, if you do that, remember the next year that you did that, or you won't have enough money in the bank account.
Right. Put that on your calendar, right? Give yourself that 10-day grace period to evaluate if you need that piece of software again. That's great. So speaking of software and tools, you have a lot to offer on your site. You have a whole program. Tell entrepreneurs out there, what should they, when they come to your site, and they're ready to learn cash flow. They're ready to learn this. What should they be signing up for and taking to quickly get the information they need?
Yeah, I think a great first step is just go to my website, cashwithmike.com. Right underneath the big header video, right where the headline is, it'll say, hey, stop, start here, right?
Right.
It's a 7-minute conversation. Now that's not all about cash flow. That's actually about learning how to understand the financial statements, because some of the cash flow techniques that you learn rely on the financial statements. So I'm saying, hey, start with the financial statements, understanding, get used to how they're set up and how they're used. And then if you want to go further, I have memberships that give you kind of a 3-pronged approach to your business. And believe it or not, it's like hiring me for $200 a month or $250 a month,
nice.
Right? Because the 3-pronged approach is I got the video courses with about 80 different resources, spreadsheets, worksheets, those type of things, and probably I'm going to say almost 20 hours or more of video that teaches you techniques at your own pace. Then you get access to what's called the live coaching calendar. And I do something every day. I have like open office hours like a professor, where I'm either teaching more about the subject or I'm working with you on your problem. You can come and go, hey, listen, I see this in my financial statements. What should I be doing? So it's like having me on your team guiding you towards, a strategy. And then lastly is this new app that I built the last 2 years called the Clear Path to Cash. The Clear Path to Cash gets you out of the spreadsheets and into a web-based app that actually not only does the work for you, but it gives you analysis on what you should do next, right? So if you're new to financial analysis and want a little help or a little crutch, get the Clear Path to Cash app, because it tells you when it sees something in the charts, it gives you the advice on what you should be looking at or doing next. So it's like having a coach in your office.
I love it. I love it. Are there, outside of the tools that you have built and the programs that you've built, are there any other tools that you like out there that, maybe something as simple as what accounting system do you personally use, and what would you recommend to others out there?
Yeah, I mean, there's a lot of great accounting systems. I personally, this is weird because I've done a lot of work in the past with like QuickBooks or Xero or FreshBooks. I use Wave, right? Wave seems to be for the
yes.
young.
I love Wave. I use Wave. I love it.
So I use Wave because I think for a solopreneur or small company, it's easy. It connects to all your bank accounts, does most of the work for you. Even my CPA goes, "Oh, this isn't bad at all." I'm like, going, "Yeah, it actually does a decent job." Right. So,
and Mike, it's
like
$16 a month. It's $16 a month. You're going to, no offense to QuickBooks, but that gets up there to $35, $40, maybe even high as $70 a month, depending on which one of their programs you have. And listen, we're talking about cash here. We're talking about preserving cash. Yeah. Let's not overspend on tools when we don't need to. Yeah.
And the other thing that I did as a solopreneur, we'll say, I went ahead and became an LLC taxed as an S corp. You're like, "Oh, why would I do that?"
Mm-hmm. Me too.
Well,
yeah.
So awesome. I can pay myself a salary, right, and withhold taxes, right? That's the biggest benefit is I can withhold the taxes. It gets paid out by Wave. I don't even touch it, right? So I don't have to put as much away in estimated taxes because I know that most of my salary is taken care of, with the payroll taxes. Mm-hmm. So that's just one of those things where I'm leveraging their payroll service. I think it's like $45, $46 a month. But it's all taken care of. It's really super easy. That was one of the things I would suggest you do. The other thing I did, and I don't know if this is probably in the forum for it, but I set up what's called a solo 401k. Right? If you haven't done something like that, it is better than what you're probably doing or an IRA or 401k because it increases your limits instead of $7,000 or $8,000 for the year. I mean, you can go upwards of $69,000, $70,000 put away tax deferred into the solo 401k. So if you haven't looked into it, it might be a way for you to do that and reduce your taxable income at the same time.
Yeah, no, great advice here. I love it. Well, so I think, today we've covered, we've disclosed the secrets behind Elf on a Shelf. We have discovered that there's something called Wealth on the Shelf, which I love. You got to do something with that. I'm telling you, that's a great idea. And really diving into, I think fear is probably the number one reason from my perspective, because that's what I used to go through before I got into it. It's like, I don't want to look at those things. I just want to go make more money. If I make more money, it'll all be okay. But that's not the answer. That's not the way to operate a business. Sure, go make more money, but you better know your books and you better understand your cash position and don't take on, especially inventory. You don't want that. You don't want Mike to walk in and the place to, you don't need that. You need to be smart about your inventory. So many lessons. I love it. Yeah. So what else? Just in closing statements here. What is there any? Are there any AI tools out there that we should know that are helping cash, or is AI not a thing that we're going to play with when it comes to finances?
Yeah, AI is something that I'm looking into very heavily. Matter of fact, we have some of it built into the Clear Path to Cash, and I'm expanding it as I get more comfortable with it. Right, so just make sure right now that some of them are a little, you got to do the math because as good of an English professor that the ChatGPT or AI is, it's not a math professor, right? I mean, I still find errors in it. So be careful with math-related problems or things like that with AI at this point. But it's moving in that direction fast because we're in the background training it with my books, with my trainings, with my videos. We're trying to train it to understand, the financial models a little bit better.
That's great. Well, as you're doing this and as you're diving in personally to AI to kind of investigate this, is there something you've come across recently that you did in AI, and it can be anything, your personal life, your business life, that you made you stop in your tracks and say, wow, that's pretty amazing?
Yeah, I've seen some data come back from AI that I can show ripple effects. That's something that nobody's really doing right now, and that's something that I've been working on, is if I make this decision, most people do it on a singular line. If I make this decision, I cut expenses by $20,000, I can put that right to bottom line. But are there other ripple effects? Are there other things that are attached with that expense that we don't think about, right? And so unintended consequences. That was the thing where I got to see how some decisions impacted other factors like debt to equity ratio or the line of credit use or how different decisions actually impact. And that's one of the cool things about AI is that it can do that type of analysis a lot quicker, a lot faster than we can. So it's the ripple effects and predictive insights that I don't think I would have ever got to. If I'd have got there, it would have taken me a week.
Yeah, that's great. Well, I love that you're training AI on what you do and all the programs you have, because I think maybe incorporating that into your personal workflow, but also helping others out there is going to be huge. But check the math. I'm with you 100%. I've seen it. Plenty of errors. I've seen it. I've had it read an article the other night and analyze the article, and it came back with something that was not even in the article. I'm like, wow, that was a new one. All right, now we're getting a little bold there with our with what we say.
Hey, I mean, when I use ChatGPT on myself, I found out that I won a Grammy, and I didn't know that either.
Well, congratulations on that Grammy. I hope you have it up on a shelf somewhere. Grammy on the shelf, and you're and I hope your voice, you keep your throat nice and get some tea in there. You don't sing too much. First of all, I've never done a podcast around finance and laughed so much. So I appreciate you, making it fun to talk about it. Honestly, at the end of the day, when I first met you, I'm like, this is why things are working for you, because you make it fun and you're just, you're like, all right, let's not kill ourselves over this. Let's just have fun and learn it. So I love that. Well, appreciate you.
Yeah, learn it and use the language that we all use, right? That's one of the big things I want to do. And I really appreciate you. I mean, you reached out. I mean, this is a great opportunity for me to get to know you better and see what you do. I've even listened to the other podcast. I just listened to the last one about EAT, and trust me, I don't know anything about that stuff. So I mean, I'm learning all about marketing and SEO, and I really appreciated that.
I thank you. Well, we're when we're in this creator world, content is a lot of work, and you put a lot of work into it. So thank you for doing that, and tell everybody where they can find you online. We will put everything in the show notes. You showed a copy of the book. I love that, and people should take absolute advantage of it. Go get it. It's free, right?
It's free.
Don't wait to. Yeah, you don't. If it's free, there's no cash going out the door, folks. No cash is going out the door. So love it. So tell me.
Yeah, come see me at cashflowmike.com. The cool thing about my name is that you Google Cashflow Mike, and I'm the only guy that shows up. Right? There's no competition for that name. You have covered that market. That's right. So, but I mean, YouTube, LinkedIn, Facebook. I've got a free Facebook group with lots of other resources and stuff. It's called the Clear Path to Cash. So any of these places, I want to put as much knowledge in your pockets as I can. And if you do need that little bit of extra help, I'm there for you as well.
Yeah, and I will say the newsletter that you guys put out is great. Quick little tips, tip information. I think that's, in bite-sized pieces sometimes is the best way to give people, especially around this topic, there may be some hesitation or, I just need to know I need to learn, and bite-sized works really well. So Mike, I appreciate you coming on again, and I look forward to seeing you in Orlando and talking some more about, what this world looks like of content creation and helping small businesses out there grow and manage their businesses better. And I hope you have a wonderful rest of your week, and I appreciate you coming on. Thank you very much.
You're the best. Thanks, sir.
Yeah. Thank you. And thank you very much, everybody, for joining us today. Subscribe to us on YouTube and join us at ecomrevolution.co, where we put out a weekly newsletter. Also, our podcast is over there as well. And if you need more information and more help on e-commerce, just join us and start learning. Thank you very much, everybody. See ya. All right, that brings us to the end of another episode of the Ecommerce Revolution Podcast. Don't forget to check out past episodes, which are all available on demand on YouTube and wherever you listen to your podcast. Ready to join the revolution? Become an exclusive part of our growing community of emerging e-commerce entrepreneurs at ecomrevolution.co. Until next time, see ya.